What's up, everyone? Welcome back to my channel, where I share with you the latest news and trends in the crypto world. In today's video, I'm going to talk about Bitcoin ETFs, what they are, how they work, and how to invest in them. This is a very important topic, because Bitcoin ETFs are a new and exciting way to get exposure to the most popular and valuable cryptocurrency in the world, without having to directly own it or safely store it. So, if you want to learn more about Bitcoin ETFs and why they are a game changer for the crypto industry and investors, then keep watching. And make sure you hit the like button and subscribe to my channel if you haven't already, because I post new videos every week. But before we get into the main content, let me ask you a question. Have you ever invested in Bitcoin or any other cryptocurrency? If so, how was your experience? Did you enjoy it or did you face any issues or difficulties? If not, why not? Let me know in the comments below. I would love to hear from you. Bitcoin is the first and largest cryptocurrency by market cap and the pioneer of blockchain technology. Bitcoin has enabled millions of people around the world to participate in a decentralized and peer-to-peer network that is secure, transparent, and censorship-resistant. Bitcoin has also created a new asset class that offers unprecedented returns and opportunities for investors who are willing to take the risk and embrace the innovation. However, Bitcoin is not easy to invest in. It requires a lot of technical knowledge and skills to buy, sell, and store it safely and securely. It also requires a lot of patience and discipline to deal with its high volatility and unpredictability. Moreover, Bitcoin is not widely accessible or regulated by traditional financial institutions or platforms, which makes it challenging and costly for many investors to enter or exit the market. But don't worry, there is a solution for these problems. And that solution is called Bitcoin ETFs. Alright, let's start with the first part. What is a Bitcoin ETF? Here are some of the key facts that you should know. A Bitcoin ETF is an exchange-traded fund that tracks the price of Bitcoin, either through spot markets, derivatives, or Bitcoin ownership. An exchange-traded fund, ETF, is a type of investment fund that holds a basket of assets, such as stocks, bonds, commodities, etc., and trades on a stock exchange like any other stock. An ETF allows investors to diversify their portfolio, reduce their costs and fees, and access various markets and sectors with ease and convenience. A Bitcoin ETF is a special type of ETF that focuses on Bitcoin as its underlying asset. A Bitcoin ETF can have different structures and methods to track the price of Bitcoin. Depending on how the ETF obtains exposure to Bitcoin, it can be classified into three main types: physical-backed ETFs, futures-backed ETFs, and synthetic ETFs. Physical-backed ETFs hold actual Bitcoins in custody and track their spot price directly. Futures-backed ETFs hold Bitcoin futures contracts traded on regulated exchanges and track their price indirectly. Synthetic ETFs use swaps or other derivatives to gain exposure to Bitcoin price movements without holding any Bitcoins or futures contracts. A Bitcoin ETF can offer various benefits to investors who want to invest in Bitcoin. Some of these benefits include accessibility. A Bitcoin ETF can make it easier and cheaper for investors to access the Bitcoin market through traditional brokerage accounts or platforms, without having to deal with crypto exchanges or wallets. Security. A Bitcoin ETF can eliminate or reduce the risks of hacking, theft, or loss of Bitcoins by entrusting them to professional custodians or clearinghouses that are regulated and insured. Liquidity. A Bitcoin ETF can provide higher liquidity and lower spreads than buying or selling Bitcoins directly on crypto exchanges or over-the-counter (OTC) markets. Diversification. A Bitcoin ETF can allow investors to diversify their portfolio with an alternative asset class that has low correlation with other assets and high potential returns. Tax efficiency. A Bitcoin ETF can offer tax advantages over holding Bitcoins directly by deferring capital gains taxes until the sale of the ETF shares. So these are some of the key facts that you should know about what a Bitcoin ETF is. Now let's move on to the second part. How does a Bitcoin ETF work? Here are some of the main components and features of a Bitcoin ETF. Creation and redemption process. A Bitcoin ETF works through a process called creation and redemption, which involves authorized participants, APs, market makers, MMs, custodians, CS, and investors, IS. APs are large financial institutions that have the ability to create or redeem ETF shares in exchange for the underlying assets. MMs are intermediaries that provide liquidity and price discovery for the ETF shares on the stock exchange. CS are entities that hold and safeguard the underlying assets of the ETF. IS are individuals or institutions that buy or sell the ETF shares on the stock exchange. The creation and redemption process works as follows. Creation: when there is more demand than supply for the ETF shares, APs buy the underlying assets, such as bitcoins or futures contracts, from the market and deliver them to the CS. In return, the CS issue new ETF shares to the APs. The APs then sell the ETF shares to the MMs, who then sell them to the IS on the stock exchange. Redemption: when there is more supply than demand for the ETF shares, APs buy the ETF shares from the MMs, who buy them from the IS on the stock exchange. The APs then deliver the ETF shares to the CS. In return, the CS redeem the underlying assets, such as bitcoins or futures contracts, and deliver them to the APs. The APs then sell the underlying assets to the market. The creation and redemption process helps to keep the ETF share price close to its net asset value, NAV, which is the value of its underlying assets divided by its number of shares outstanding. Fees and expenses. A Bitcoin ETF charges fees and expenses to cover its operational and administrative costs, such as management fees, custody fees, transaction fees, audit fees, legal fees, etc. These fees and expenses are deducted from the NAV of the ETF and reduce its performance and returns. The fees and expenses of a Bitcoin ETF vary depending on its structure and method of tracking Bitcoin price. Generally, physical-backed ETFs have higher fees and expenses than futures-backed or synthetic ETFs, because they incur higher custody and transaction costs for holding and transferring Bitcoins. Risks and challenges. A Bitcoin ETF faces various risks and challenges that can affect its performance and returns, such as market risk. A Bitcoin ETF is subject to market risk, which is the risk of losing money due to fluctuations in Bitcoin price or market conditions. Bitcoin is a highly volatile and unpredictable asset that can experience significant price movements in a short period of time due to various factors, such as supply and demand, news and events, regulation and policy, innovation and competition, etc. Tracking error. A Bitcoin ETF is subject to tracking error, which is the difference between its share price and its NAV. Tracking error can occur due to various factors, such as fees and expenses, creation and redemption process, liquidity and trading volume, market inefficiency and arbitrage, etc. Tracking error can cause a Bitcoin ETF to underperform or outperform its benchmark, such as Bitcoin spot price or futures price. Regulatory risk. A Bitcoin ETF is subject to regulatory risk, which is the risk of facing legal or regulatory actions or changes that can affect its operations or viability. Bitcoin is a relatively new and unregulated asset that faces uncertainty and scrutiny from various authorities and regulators around the world. A Bitcoin ETF may face delays or denials in obtaining approvals or licenses from regulators, or may face restrictions or bans on trading or holding Bitcoins or related assets. So these are some of the main components and features of a Bitcoin ETF that make it work. Now let's move on to the third part. What are the available Bitcoin ETFs? Here are some of them. ProShares Bitcoin Strategy ETF, BITO. This is the first Bitcoin ETF to trade in the US, launched on October 19, 2021, by ProShares, a provider of specialized exchange-traded products. This ETF is a futures-backed ETF that seeks to track the performance of the CME/CF Bitcoin Reference Rate, BRR, which is a daily reference rate of the US dollar price of Bitcoin based on transactions and quotes from major cryptocurrency exchanges. ProShares Short Bitcoin ETF, BD. This is the first inverse Bitcoin ETF to trade in the US, launched on October 20, 2021, by ProShares. This ETF is a futures-backed ETF that seeks to provide the inverse, 1x of the daily performance of the CME/CF Bitcoin reference rate, BRR, meaning that it aims to profit from a decline in Bitcoin price. VanEck Bitcoin Strategy ETF, XBTF. This is another futures-backed ETF that seeks to track the performance of the CME/CF Bitcoin reference rate, BRR, launched on October 25, 2021, by VanEck, a provider of innovative investment solutions. Valkyrie Bitcoin Strategy ETF, BTF. This is another futures-backed ETF that seeks to track the performance of the CME/CF Bitcoin reference rate, BRR, launched on October 22, 2021, by Valkyrie Investments, a provider of alternative investment products. Simplified Bitcoin Strategy Plus Inc. ETF, MAXI. This is a synthetic ETF that seeks to provide exposure to Bitcoin price movements through swaps or other derivatives, launched on October 28, 2021, by Simplify Asset Management, a provider of portfolio solutions. Global X Blockchain and Bitcoin Strategy ETF, BITS. This is a hybrid ETF that seeks to provide exposure to both blockchain technology and Bitcoin price movements through stocks and futures contracts, launched on November 9, 2021, by Global X, a provider of thematic exchange-traded funds. So these are some of the available Bitcoin ETFs that you can invest in right now in the US. Of course, these are not the only ones or the best ones, but rather a general overview and comparison for your reference. For more details and information, you can check out the official websites and prospectuses of these ETFs. And now I have a question for you. What do you think of Bitcoin ETFs? Do you like them or dislike them? Do you invest in them or plan to invest in them? What do you think are their advantages or disadvantages? Share your thoughts in the comments below. I would love to hear from you. And that's it for this video. I hope you enjoyed it and found it useful. If you did, please hit the like button and share it with your friends and family. And don't forget to subscribe to my channel and hit the notification bell, so you don't miss any of my future videos. I post new videos every week, where I share with you more news and trends in the crypto world. Thank you so much for watching, and I'll see you in the next video. Bye for now.